Hello, everyone. My name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to share with you a brief update on the crop outlook as we're sitting here in mid-June. Now, in June, we oftentimes get reports from USDA at the end of the month on what we've planted this current spring. And as we're looking forward, I would say the markets are trying to balance out what we've seen thus far within the markets versus what we're about to see as we look forward to these reports, especially the June acreage report. And as we're looking at what USDA has found thus far, what they've basically provided us as we're looking at the 2023 crop is that we do know that farmers intended to plant more corn here in 2023, and we know that the planting pace was a little bit ahead of average. So typically that means we will see that corn area planted, stronger as we're looking at what we expect to see in June. The challenge here is, though, is while the crop has gone in well, we are seeing some signs that drought problems are still out there, that's dryness that has extended across the entire corn belt is hampering corn ratings as we look at the crop. And so as we are standing here and looking at the 2023 numbers that USDA has currently right now, they're looking at still the potential of a very large corn crop here in 2023. As you can see here, estimating right now a little bit shy of 15.3 billion bushels of corn. But we're also getting ideas of how demand is shaping up as we're looking forward for 2023. And probably the biggest concern right now lies within the export picture as you look here. About the fourth line down there in that gray box is where exports sit. And what USDA has continued to do to the 2022 corn crop is they've continued to adjust downward on that international demand. In fact, we saw USDA lower that number by 50 million bushels within the June report. Now, as we're looking out to 2023, USDA is showing a bounce back in that export demand for the upcoming crop. But it does come into question that as we look at advanced sales, we're not seeing that sort of strength in advanced sales for 2023 that we would normally see at this time. So it does beg the question of will USDA have to adjust the 2023 exports down as well? When you think about having to adjust that downward, that would put more downward pressure on prices as we're moving forward here. USDA has held firm to their season average price estimates of $6.60 for the 2022 crop and $4.80 for the 2023 crop. Now, as we're looking at soybeans, very similar tale there, where USDA is looking at on the 2023 planting side, planting pace was ahead of normal, but conditions are a little bit below normal right now. And so they kept the crop estimates as the same place as they had them in May. So we're looking at roughly 4.5 billion bushels of soybeans being produced this year. And as we shift down to the gray box, the demand side of the market, again, we're seeing similar weakness, especially as we look at international sales. For the 2022 crop, USDA recently lowered those export numbers down by another 15 million bushels, so dropping us down to a flat 2 billion bushels being exported. And the challenge for the soybean market is USDA's projections already showed a continued decline in exports as we're looking forward to 2023. So again, the international markets sort of loom large as we look across both corn and soybeans here. With USDA, as they did with corn, holding their season average price estimates constant right now. So for the 2022 crop, we're looking at $14.20 a bushel. For the 2023 crop, down to $12.10 a bushel. Now, looking at those crop conditions, in this case, with the earlier plantings, USDA was able to start to provide these earlier than usual, and looking at the good to excellent ratings for the crop. But what we saw across both crops is weakness not only compared to the ratings last year early in the season, but also with the 5-year average. In fact, as we look at corn ratings, they started in the mid 60s in early June. We've seen that slip a bit as we've got in here to mid-June. So we're looking at about 61% of the crop rated good to excellent across the nation. And when we're thinking about those yields that we'll expect to see at the end of the growing season this year, usually when the crop's planted earlier, that's a sign that we could be looking at trend line or better yields. But with the crop conditions ratings below average, that's pushing us trend line or below. So USDA is seeing mixed signals in terms of yield potential as we look out there. And that's why they held firm at trend line, at least for the June report. And when you look at the soybean ratings, it's the same deal. Planting progress would point to above trend line yields. Crop conditions, though, right now would point to below because we are seeing these crop ratings below last year and below the 5-year average. The thing that's really pushing these crop conditions down is the extended dryness that we have seen, especially emerge as we look towards the eastern corn belt. We've been watching this drought that has been in the West for the past 3 years, and it really had concentrated, if you will, in Nebraska and Kansas over the past year. What we've seen build on since then, though, and especially within the last month, is this area of, let's call it, moderate drought that has extended itself into Illinois, Indiana, Ohio, so that the eastern corn belt is facing some of the dry conditions that the western corn belt had already been dealing with for the past couple of years. That has those condition ratings down a little bit, but as we're looking forward, the question is, when might we see improvement? And at least what the National Weather Service is providing in terms of a seasonal outlook, it does show more moisture moving into especially the eastern corn belt as we're moving through the growing season here, so that we should see a rebound in those crop conditions ratings as we move through time. The question is, will that be quick enough to truly help bring the crop to those trend line yield levels that USDA is projecting right now? But as I look, like I say, when I'm looking at it right now, I think supply side, we have some factors pushing in both positive and negative directions. When I look at the demand side of the market, though, we are truly struggling with a lot of downside momentum right now. And a lot of that has been driven by our lack of export sales here, especially over the past, say, 7 to 8 months. Here's a graph showing you changes in our export sales this year compared to last year. And, in terms of the sales on the 2021 crop, so if you will, looking back at last year's crop, we did see fairly good export sales. In fact, in terms of dollar sales, dollar amount of sales for soybeans, 2021 would be a record in terms of those dollars coming in from exports. 2022 thus far has been a little bit below, not necessarily well below average, but just below average in terms of our export quantities moving. And we've been watching that price decline as well. So it's sort of a double whammy in terms of the amount of dollars coming in from the export markets. Now, when looking at our soybean export sales thus far, our top market, China, is still showing some growth out there at about 2%. But as we look across the rest of the markets, we are seeing significant downward pressure, especially as it comes to sales into the Middle East or North Africa. And when I'm looking at those sales to unknown destinations. And it's actually those sales to unknown destinations that does give me pause as we look forward through the rest of this summer, because most of those sales usually end up in China, which means maybe that 2% growth is not actually what we're experiencing in China either. It could be that China looks like the rest of the world in terms of declining demand for US soybeans in that market. And that declining demand has not only hit the sales for the crop we just harvested last fall, it's also showing up in the advanced sales we're seeing for the crop we're going to harvest this fall. In this case, I really want you to concentrate on the red line on this graph. Those are our advanced sales for the 2023 crop, and compare that to the black line within this chart, which is our average pace for soybean sales as we're growing the crop. And as you can see here, we've been running well below average for the past several months in terms of those advanced sales. We're not seeing countries line up to purchase soybeans for our upcoming season as quickly as usual. In fact, we're roughly about half of what we've normally should see in terms of export sales. And that's coming because of the high prices we've had over the past couple of years, combined with, significant increases in production, especially out of Brazil. So that competition has really taken a bite out of us here. The challenge is going to be, can we gain some of these sales back as we move closer to the growing season? And that'll be one of the things I'm watching for during the weekly export reports, especially as we move into late July into August, because that's when we tend to see these advanced sales start to really pick up some steam going into harvest time. Now, when it comes to the corn market, we've seen even larger declines in our current export sales. As you see here within this graph, it doesn't matter whether I look at our major markets, our smaller markets, or look at the total across the globe, we have seen a significant pullback in in demand for U.S. corn from the international marketplace. And those cuts have come from Latin America, Southeast Asia, as we look into Central America. And so it's a general pattern across the globe that we're seeing here. And so it's the same reasons that we're seeing in soybeans, the high U.S. prices combined with increased competition, especially out of Brazil. But also here with corn, I would say it's getting hit harder as well because we are seeing increased competition from other feed grains, especially as we look at wheat coming out of places like Ukraine, southern Russia. We've also seen more competition from other feed grains such as barley and sorghum that's been eroding away at some of the additional sales U.S. corn have made over the last couple of years. Like with soybeans, if you look back to the 2020 and 2021 crops, those were records in terms of export sales from corn. 2020 was a record in terms of bushels. 2021 was a record in terms of dollars. Here with the 2022 crop within this graph, we can see that no, we've not only suffered a reduction again in bushels, but also in price. Again, a double whammy in terms of the impact it has within the U.S. corn market. And just like with soybeans, we're seeing that our advanced export sales are falling well below average as well. In fact, corn had been sort of clinging to average until we got to the month of May, but since then we really haven't seen any sort of pickup in terms of our international demand pulling on our corn market. Where we normally do see, especially as we move through May and early June, some additional sales. Usually they're coming from China. In fact, as you look at this graph, you can see that big jump in the blue line here representing the 2021 crop year. That was China jumping into the U.S. market in a big way back in the, in this case, it would have been May of 2021, purchasing that crop for the following fall. We saw a similar but much smaller run in 2022. As you can see, the green line there, we saw China coming into the market in April back then. It was smaller, but still in a positive direction as we look there. As we look here thus far for the 2023 crop, not only have we seen a drop in sales into China on the advanced side, but we've also seen China slide from being our top market, usually in advanced sales. They've dropped down to number 2 this year, trailing now Mexico as we're looking towards those advanced sales. But both in Mexico and in China, those numbers, those bushels that have already been bought, are below what we saw last year. So we are struggling to find, like I say, even at these lower prices that we brought in over the past couple of months, we're struggling to find that, if you will, surge in exports that we normally see when we drop prices as significantly as we have over the past few months. And so as we're looking at the price setup going into the mid-June, we do see still strong prices as we're looking at the 2022 crop to finish that out. But as we look forward to 2023, we have seen those prices back into the mid $5 range. And as we look all the way out to the 2024 crop, we see us taking another step down by about another 30 to 40 cents. If we look at the soybean market, very similar. Again, strong prices for the rainy cycle on old crop. As we look forward to the 2023 new crop, those prices are weighing in at around $12 a bushel, so lining up fairly closely with USDA's estimate right now, but then stepping down a little further as we look out there towards 2024. And so it's this combination of right now, yeah, the supply side, the crop does look a little weaker than it did last year, but there's a lot of it planted this year. And so that means we're still staring at a possibility of stronger production and weaker demand right now, especially from the international sector. And that's got prices right now still in let's call it a weaker spot than we've sat through most of the last couple of years. Now, the sort of the silver lining here for many of our farmers is these prices have maintained themselves at around production costs. So while we have seen that profit margin decline significantly over the past few months, we are still around break even. We haven't necessarily fell below that yet. The concern here is if we don't see some additional export sales, we could see our prices slide below those break-even production cost numbers. So that's the challenge that we're seeing in the market right now. We have to wait and see as USDA continues to update us weekly on how the crop looks. So giving us that weekly snapshot on supplies along with those weekly export demand sales there. Those will be the two features that feed traders information as we move through the growing season to determine what crop prices will look like at harvest time. So that's a brief update on what we're seeing within the markets right now. Again, my name is Chad Hart. I'm an extension economist with Iowa State University. And I hope you enjoyed this video, and I hope you continue to view the videos as we move throughout the growing season. Thank you for your time.